We are live. All right. Give me 1 sec. And it's 12 right on the nose here. We got people coming in. This over to here. All right. All right, guys. Welcome, welcome, welcome. I'm going to share my screen now. Good morning. Good afternoon. Just re-entered a short, but I'll explain it here because this morning I gave a signal here. Short scalp, feeling we will see the 108, 110 level here soon. I'm short for a short scalp. Entry 114 at the time, stop loss 112, 200, which was very tight. I even said it here in the note. This is a short-term short scalp with a tight stop loss above the entry in case there is a trend reversal. If it moves to 110.5, I will move my stop loss into profit. This is what it looked like at the time. We have this bullish flag kind of situation, but we did break to the downside here. We came back up and retested about 113.5 here and then dropped back below this line and below this bottom red line here, which is the 112 right on the nose. We dropped below it, came back up and was retesting this, the bottom of the overall flag support level right here. I was saying it was going to go down to somewhere in this range right here. And I will show you my thought process behind that. This is a different computer, so obviously all my lines look differently up here, but I'm going to get rid of everything and start over. And basically thinking that we were going to bounce off the 112. This is the 112 line right here. Let me just go up to a hourly. So 112 is the major support that we've been waiting to come back down to test, which we did. It was also the previous resistance here and all the way here back in May. So we had resistance, resistance, resistance here in July before we broke through. Support, we hit all-time high at 123 and a new all-time high at 124.5. Technically speaking, that was a double top because we didn't hold above the 123. We just wicked above it and came back down. We come back down all the way to 112, we bounced. And then we had this bullish flag right here that was going on for a while. It looked like a bull flag, right? And this is what it looked like. And it just kept going. Normally, when these just keep going, if they get all the way down to the breakout level here, then it's no longer a bull flag. But this one dropped yesterday, I believe. Just dropped from way up here. It didn't even come down to the bottom and break through. It literally just dropped from the top up here, straight down, all the way to 110.6 is where it bounced. 110.5, actually, to be exact. Sorry, 110.6. Bounced back up above, back up above the 112, hit resistance here at the bottom of this flag. It used to be a flag. It was inside, came below, hit resistance, couldn't get back in. And somewhere in here, it comes back down underneath the 112, and I gave a short scalp signal because I'm expecting it to come down to this range, somewhere in here between, in fact, I'm gonna give it a parallel, somewhere between 110 and 108.5, somewhere in here. There's a reason for that. I'm just going to go to 108, 110 to 108. Well, let's go look at the reason. Let's just bring this back. Probably more like right there, 110, 110.5 to 108. Man, probably 107.5, but I said 108. So let's go back and look at what I said. I said, on the signal, I said 110. Oh, feeling we will see a drop between 108 and 110. So in this zone right here, we do have some major support and resistance, consolidation, support, resistance, support, resistance, support, resistance, 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 support, and resistance up here on the top level, and support before we broke out. And we did come down and hit this as support at 110.5, 110.6 here, 110.5 here. So we are at the top of that range. And then we did bounce back up, and it did go through my stop loss. I had it at 112.200, I believe. Let's just go look. 112.200. Did hit my stop loss. I didn't notice till right before this call there's some people in the chat talking about how they got stopped out and stuff. And there's nothing wrong with expressing that in the group, guys. Obviously, if it happens, it happens. It happened to me too. I did re-enter, however, and I did it right when this call was starting. So I will let you know. 111. Actually, it's showing my entry at 111.443. That's not a re-entry. Hold on one second. I can't remember. I just came downstairs. So when I posted this, it was on my laptop upstairs, and I might have been in a different account. Let me just see what I think's happening here. Let me go back here, get the trend line out. Anyway, what I was going to tell you is I still think we are going down. Now, it did come up and hit my stop loss, but that doesn't necessarily mean the signal is wrong. It just means maybe that my timing was off. Maybe my stop loss was too tight. I did say tight stop loss with a tight stop loss, and that is tight. You run the risk of getting stopped out more often when you have a tight stop loss because you're not really giving it any room for consolidation. But the reason why when I do use tight stop losses, the reason why I am is because because I put the stop loss right above major support and resistance. So if it breaks that, which is the 102, the 112, if it breaks back above the 112, then chances are it might want to continue back up again. Maybe just wicking down to the 112 here, hitting it, wicking through to the 110.5, wicking through the 110.5 double bottom. Maybe that's all it needed. maybe that was it, and it's ready to bounce out now. I've seen that happen before. But when I look at other indicators, when I look at other things that are going on, I'm not so sure that we are done yet. Sometimes I look at other factors here. I look at other weird resistance areas. This is not normal technical analysis here, but this is just me wondering why we had major support and resistance here before breaking above and creating this little flag here and then falling back below, back into this channel. So we are still in this channel now. We did get above it. It was a bull flag. Bull flags tend to break to the upside, but something strange was happening and we just dropped right back through. So there's a couple ways to look at this. Is this a giant M pattern on the hourly and the daily? Yes, it is. Does that mean we're going to drop? No, not necessarily, but it is for sure, in my opinion, a giant M, right? M patterns tend to be bearish. So, but do I base my opinion just based on that one pattern? No. However, there's a couple other things. Double top. This technically was the all-time high at 124.5, yes, but it did not hold above this peak up here at 123. And I can go back and show you numerous times when that has happened throughout history. In fact, let me just go to the daily. And let's just go back to here. Let's go back to here. So this was the last bull market. We hit 64.5, had a big pullback, consolidation, ran back up and hit 68. We went above it a little bit, a couple $1,000 from 64.8 to 68.5 or something like that. But as you can see, we didn't hold above it. That was considered a double top. We wicked above it a little bit. Here was the high. Here was the new high. Price-wise, we got higher, but we did not hold above this. Then we fell back through. Back here, we've seen this happen a couple times. More currently, this is when we came to a new all-time high. By the way, we broke previous all-time high right here at 73.8. We broke it here. Whoops. We broke it here and went up to a new all-time high of 108. We consolidated all the way down to 88. Think of that. $20,000 drop. And then we ran back up and just went to 109. We only went up $1,000 more. And once again, we did not hold above this high. We just wicked above it. And then that was it. We came back down for a large consolidation, another big M. And then this falling wedge pattern that took, well, from January 19th all the way to April 12th, approximately April 19th, probably 3 months, we dropped in a giant falling wedge, and then we broke out, retested. Chad was giving long signals in here. I was giving short signals every time we hit the top of this. If you went here and you remember, made a lot of money on the way down here. And I was expecting it to go a little further, but it bounced here at 74.5, not quite 73.8. So that's why I didn't think we were done. But it did bounce, and it bounced out. And then we ran up. And where did we run up to? We run up to just a little higher. So right here, we had 108, 109, and then 112. Just a little higher. Still didn't continue. Fell all the way back to 97. So another $12,000, $13,000, $14,000 drop. And then it comes up, hits the 112, breaks out, makes a new high up here at 123. Consolidates, comes all the way down to 111, 111.5 or so. Bounces and goes all the way back up. $12,000 drop, all the way back up. Wicks through it to 124.5, only $1,000 more, and then drops all the way back down. Do you see a repeating pattern here? And this does happen often, where we hit a high, have a big pullback, run up to a new high, but the high doesn't go much higher, and then we have a big pullback. It happened here a little bit too. At the 73, we come up and we hit 72. This one didn't get higher, but Similarly, it was an M and we created a big bull flag, and that lasted 280 days, 7 months of downward trending before we broke out. This one was 3 months. I'm not suggesting that those things are going to happen, but what I do when I do technical analysis is I look at what's happened, I look at the history, I look at the current trends, I look at the current time frames, and then after I look at this, I say, okay, well, where is the support? The support is 112. We hit it, we bounced, but we didn't bounce out and go crazy, did we? So what I noticed and what I've learned over the years is that when it is truly the bottom, it will never stay there long. When it's truly the bottom, it pumps out quick. When it's not the bottom yet, after a big dump, big dump, this one didn't pump out. This one didn't just go, it didn't just have a big dump and then shot back up. It had a big dump. It didn't go anywhere, just kind of consolidated. It went down a little lower, came up, still lower, lower high, lower high, lower high, and then dropped further. Came up, but didn't really go anywhere, just kind of consolidated. And did it pumped up a little bit, but it certainly didn't pump all the way back up to a higher high or another higher high. And then we had lower lows. So a lot of times whenever something drops and just kind of stays down there on the floor, that's concerning to me. Usually means big jump and then kind of just stays down here for a while. Doesn't mean it won't go back up, but it's not shooting right back up right now, right? So that means to me 9 times, I would say seven times out of 10, maybe not 9 times out of 10, 7 times out of 10 that it's not the bottom yet. Now, if it is the bottom, and it could be, but usually it bounces out quick. Look at these long wicks to the downside here. That's an indication that we wicked all the way down and sucked all the way back up. Wicked all the way down, sucked all the way back up. That's buying pressure. That means the bulls are winning. The bulls are pulling the price back up. The bears, it tried to come down, but the bulls pulled it back up. Long wicks to the downside usually do mean that it could be a bottom and then it's ready to go. But generally speaking, the very next candle is the one that goes. Big wick to the bottom, next candle goes. Big wick to the bottom, next candle goes. But when it doesn't, big wick to the bottom, and the next candle also does a big wick to the bottom, something strange going down. And so, and then when you go and look at some other things, let's look at the liquidity. We did come back up to get some of this here at the 111, 112, 112.5, but we still got a lot down here at the 109, all the way down to somewhere between 108 and 110 range. And then if we go to look at what's going on over here on the 1 hour time frame, it does look like there might be some upward trending pump right here, some upward trending action here, but it's having a hard time getting above where are we at right now, 112.7. So it is climbing a little bit, but what is it climbing to? So is it just climbing to the top of the downward trending resistance? Or is this the double bottom that we needed to break out? So what I would say is I would not go long until it breaks out of that. To me, this is still a lower low. And I'm not saying it's not bouncing and going out. I'm just saying that it's doing it very slowly. And right now, I don't really see a lot of buying action happening. So that's why I stay in that short. So but I'm willing to reverse it. If we get above this level, probably right here. And then that would also create on the hourly, if we did get up to here, maybe a W on the lower time frames, which could bring us out of this. But I would say we need to get up here too in order to really be out of that downward trend, because right now we got some we got a big drop from the all-time high up here. And when it bounced down here, it did not come back up. It just dropped further. So I'm a little concerned with that. Now let's look at market cipher, see what it's got to say. The short term, there's a green dot on the 10-minute. We got a lot of upward trending momentum here, but we're already at the top of this scale. Let's go to the 1 hour again. We do have money flowing in. That's good. Let's go to the 4 hour. 4 hour, we just got a green dot down here. That's good. On the daily, we just get a red dot. But that was probably right where that big drop was. And money flow is still flowing now. A little conflicting information depending on what time frame you're on. That's why, guys, when I give a signal and I say short scalp, short, that's short scalp, doesn't mean I'm just scalping short. A lot of times I mean short duration as well. We're not going to be in this long. It's a short. Usually when I put a note to clarify, it's you. If you don't get in like when I got in, it's too late. Just wait. And it doesn't work out for me a lot of times. Also, when I'm doing short scalps, but it doesn't hurt me that much because I put a tight stop. And so a tight stop doesn't really, that's the whole point of the stop in case you're wrong. So if you're over trading or you're taking too many trades, because I saw some people in the chat say, oh yeah, it's like, Chad gave 3 signals and I get into one of them and that's the one that doesn't do good and the other 2 do good. So it's not Chad's fault, right? But is it just that we, first of all, we already know, and we've already mentioned this probably 10,000 times over the past 5 years, is that we don't win every trade. You will never win every trade. Even if you're on a roll and you're up to 50 trades and all of them are winners, it ain't going to keep going like that. You will have a loser. But I don't even try to win every trade. All I try to do is cut my losses short on my losses and make more on my winners. So as long as I have more money, more gains on my winners than I have losses on my losers, then I am positive. Now, what I say is that a lot of people are trying too hard to not have any losses, and that's causing them to have losses. I don't know if you're trying to not have losses or you don't want to put a stop loss in because you don't want to have a loss. I don't know what the logic behind that is, but I've seen some people move their stop loss out of the way or not have one because the last time they used one, it got hit. And so therefore they're like thinking, well, if I just didn't have that stop loss there, I would have still been in this trade. In other words, the stop loss was here. It went down and it came up and hit the stop loss, but then it went down. And they're like, damn, if I didn't have that stop loss there, I would still be in this trade and I'd be profitable. And I know there's a lot of you that are shaking your head right now saying, yep, that's happened to me. It's happened to me too. But that's called hindsight genius. That's after the fact, you can look back and say, yeah, if I didn't have that, or if I had it way up here, it wouldn't have got hit. That's true. In hindsight, that is absolutely true. But if you had it up here instead, and this didn't turn here, and this just kept going the wrong direction, and you got stopped out up here instead, you would have lost a lot more. Or you move it again because it's coming up there and it just keeps going. And then it comes all the way up to here. And finally, you can't take it anymore. And you just close out the trade with a big loss. And then this thing comes down and does exactly what you wanted it to do. So how do you combat that? What you do is you just put your stop loss tight. I mean, not always. Obviously, there's right places to put your stop loss, like to avoid the liquidity traps and stuff like that. But if I give a signal on a tight stop loss and I get stopped out, That's because I wasn't sure if it was going to pop back above or not. And if you're not sure, you shouldn't be trading at all, probably. But when I'm doing a short scalp, I also think that there's a good chance that it's going to come down a little further. And if I'm right, I will make good money, and if I'm wrong, I will just lose a little. So I don't. I already account for being wrong, but I don't account for losing much when I'm wrong. Right. So I think what a lot of you do is when you do get stopped out, maybe you follow my signal exactly and you got stopped out and then you get mad. But did it just hit it and come back down? No, still above it. Still above it quite a bit, actually. My stop loss is at 112,200, and now we're at 112,800. So you should be glad that you got stopped out and you didn't have a stop loss much higher. Now, if you didn't have a stop loss and you're still in that trade, then you're going to be much more negative. Even if it does eventually go down and I'm eventually right and you ride it out, you could weather the storm. You could be like, oh, that's no problem. I'll just hold it until it goes down and I'll just hold it negative. How many of you have done that before? Well, if it does go down, then yeah, that's okay. But it's a nail biter during the time that it's not down. While you're waiting for it to go down and while you're negative, sometimes a lot for some of you because you didn't have a stop loss or you moved it out of the way, then that's the stressful part of trading that you don't really need to have when you could have just been taken out and then reevaluated. Could have just been taken out in tight stop and just reevaluate it, wait for the thing to turn. But I see people get mad that they got stopped out and they blame the signals when the reality is though you should blame the signal if I didn't have a stop loss and you didn't get taken out and you're very negative. Then that would be something to be upset about. But the purpose of the stop loss, guys, is just what the name implies, and that is to stop your loss. So Chad made a comment in the group about how we see a lot of people complain when their stop loss gets hit, but no one's bragging. Well, I shouldn't say no one. There's a lot of people bragging when their trade does what they want it to do. But it's usually the people who didn't get in the trade when it went good, when it hit the target, when it's in profit. They didn't get in those trades. They only got in the ones that hit the stop loss, and then they're mad at the signals instead of mad that they missed it. Not everybody. Obviously, there's some people commenting that it's their fault that they. But is it ever our fault? Does Nico and Chad ever take blame? Yeah, sure. I'm the one that gave the signal. So obviously, if you took my signal and you lost money, technically, is it my fault? I mean, kind of. You can say it is. You can say it is. I don't say it is because that's the nature of the business is that we are giving trades based on laws of averages and probabilities. So we're basing a trade signal based on what's the most likely thing to happen, in our opinion, based on technical analysis. And if it doesn't do what the most likely thing to happen is, then that's an anomaly to me. That's like, okay, well, it didn't do what I thought it was going to do based on my knowledge and my experience and based on my technical analysis and based on what I think is about to happen. It didn't do that. And sometimes that happens, guys. I can't be right all the time. If I was right all the time, I probably wouldn't be here teaching. And not because that you might say that doesn't make sense. Why wouldn't you? That's because I would be a multi-billionaire and I would have huge hedge funds paying me millions of dollars to consult with one person. So when you're a trader in the retail space like we are, you're not going to be right all the time. In fact, there's too many factors that make it, I wouldn't say impossible to be right all the time, because there are some people that have high win ratios, but improbable for you to actually know everything that's about to happen at any moment, no matter how many indicators you have, right? There's just too many things. And so what we do is, like you ever see the Discovery Channel when the whale is opening its mouth and it's coming up to eat all the shrimp, what they call brim, all the little tiny shrimps, and it opens his mouth and it just gulps them all up in one big bite. That is the majority of traders. That's the majority of the people out there that don't know what they're doing. They just kind of jump into the market. They have no training whatsoever. They don't understand anything. And they're just throwing darts at the wall, throwing shit at the wall, hoping something sticks. Right. And then you got the sucker fish. They zoom in on the whale, and the whale has all these fish stuck to the side of its head. These fish ride along with the whale. They're not getting eaten by the whale. They're getting the leftovers. They're cleaning the whale. The whale, they want the whale to survive and eat because they're living off the whale. Right. And so I kind of look at us that way, is that, are we going to be eaten by the whales? Not if you use proper risk management. Are you going to win all the time? Hell no. The whales don't win all the time. I don't know if you guys noticed this or not, but Bill has brought it to our attention. Some other people in this group who track whale movements. There's been guys and gals, I don't know if they're guys or not, but there's been traders who've had multi-double and triple $1 million trades get liquidated. And we see them. We see them happening. $10 million liquidated on one trade. We see it happen. They took a risk. And so I say all that to say this, is that this is a business of skill, but even Michael Jordan, even LeBron James don't win every game. You can be the most skilled person there is. And I'm not. I'll be the first to tell you, I'm not the most skilled person there is. But I know enough to make a living. I know enough to make money, but I also am conscious to the fact that when there's a loss, and there is, I have multiple losses per week, they're just small in comparison. Or they're, or I'm not even paying attention because I'm teaching. So and I will admit to that, guys, there are some times when I will just take trades just to show someone how to enter a position. And I should do it with very little money. I don't know if you've ever been on my webinars, but I'll take a trade just to show someone how to enter and put their stop loss, and I'll do it with 20,000 contracts. Do I need to do it with 20,000 contracts? No, I could have waited. And I'm not even waiting for a proper trade setup when I do it. I'm just going long or going short just to show them how to enter the position. And I'm doing it with a ridiculous amount of money when I should be doing it with hardly any money. But I also want them to see dollars in there, and show up. So it's not such a tiny fraction. So a lot of times I'm sacrificing my own money just to show somebody how to do something. But I have sub accounts for that. I have money in an account specifically for teaching purposes. And a lot of times I still make money on those trades. I mean, there's been many times on my live webinars where I'm up $1,000, $2,000 within an hour while the webinar's going. Just because there happened to be either a trade setup or the trade was going in the right direction when I was giving the example. I mean, I will try to make an intelligent decision, even on those teaching trades, based on where I think it might go in the short term. But, would I normally be trading that if you guys weren't an audience? If I didn't have an audience? No, I might just be sitting on my hands waiting for the proper trade setup. And so what I think a lot of us do is, because we're in such a hurry to make money, is we're trying to get in positions. We're trying to take trades when there's really no trade setup. We're chasing. We see a big move to the downside. We try to jump in because we want to catch the fall. We see a big move to the upside, so we jump in long because we're trying to catch the long. And if you weren't already in those moves, it's probably too late. And then you get cut. That's why they call it, don't try to catch a falling knife, because if you try to jump into a short after it's already made its biggest part of the move to the downside, it's going to bounce and slice you. And so you guys aren't doing anything wrong. You're just learning, but you have to look at it as the learning phase and not as, oh, this sucks. This is impossible. This is, and I know most of you know this, especially if you go into the wins wall. There's a lot of people that are on this live call right now, and they're silent. Like, they don't even ask questions anymore. They just tune in. They're still learning. They're still listening. But do they need us anymore? No, because they're in the wins wall posting 200 and 300% gains almost every day on coins that I'm not even giving signals on. So that means they learn. They already know how to go find trade setups. So once you get past that awkward stage, guys, and I know a lot of you are in that stage, whether you're a day here, you've only been here a day, a week, a month. Some people, it doesn't matter. You could be here 2 months and still be kind of still figuring things out. There are some people who've been here a month or two and they're already making ridiculous gains. And we've had some outliers for sure. We've had people in this group like TJ and John and Chris. I mean, there's probably dozens more I can name who just made a ridiculous amount of money in their first year and relatively quickly. Russ, crypto booming. I mean, he made all his money back when he joined this program in his first 3 weeks. Like some people just catch on quick. Some people just get it fast. And some people take a little longer. So I say all that because it hurts me to see people in pain. It hurts me to see people take losses. It hurts me to see people frustrated or upset. But especially when I'm one of the leaders of the group and I have to. Could I be a hard ass and say, "Suck it up, Buttercup," and and just stop making mistakes? I could, but that wouldn't be nice of me. And not only that, and maybe you didn't make a mistake. Maybe you did exactly what I said to do, and you still got a loss. And that happens because I'm not infallible. I have losses too. But when that happens, I don't complain to anybody. In fact, it was last night, right before I was going to bed. I can't remember what position I was in or what happened. Oh, I think it was when Bitcoin had that drop, when it had that real sharp drop out of that channel I was talking about. Um, I think I was in a long right then for some. I think I was in a long from the previous. Let me just go back and look in the trade signal channel because I think I did give a long signal right before that happened. Yep. Let me show you guys right here. This is on the 23rd. Let's XRP. Hold on. BTC, I am long again on the breakout. It was doing one of these things right here. And you remember I had this green line going up and this red line going down in this big bullish flag kind of situation. And right down, way down here, you can't even see it. Down here underneath here is the 112. This is like 114 right here. But it looked like it broke out of this downward trending channel, but this line probably wasn't in the right spot. And it just dropped from here all straight down to like 112, like very fast. And I got taken out of that. So let's see, one here, breakout. This is what it looked like. So as you can see, I had this line here and it looked like it went above it and it was bouncing on top of the line. But later, when I moved this line from here to touch the top of this, it was still inside of this and it dropped from here straight down. You go back, show you this one right here. I think I had it like this for a minute and I thought it broke out. I think I had it like that. Some of you might remember. Let me just move this stuff so you can see it. I think I had this as a bull flag channel like this. It broke out here and retested is what I thought. But as it started to do this, I realized that maybe it didn't break out and maybe this should be like this. And this is just nothing yet. Or I don't have this in the right spot. Maybe this was this right here. And when you zoom out and you kind of really dial things in, you realize, okay, well, this might just be a much bigger channel here. And it just fell from way up here, straight down, all the way to here. So that happens. Now, if I would have had if I was long here because I thought this broke out and bounced, I should have had a stop loss like right here. I would have been taken out here. But I think I had a stop loss under the channel or under the lowest wick right here. Should have been taken out here. But let's see, where did I put my stop loss? Where did I say to put it? I had 3%, mine's at 11.48 entry. Oh no, that was long. At 11.4868. That can't be the one. 11.48. I mean, I'm sorry, not 11.4. What am I saying? 114.868. 114.868. Yeah, I would have been taken out right here. And once it started to come down close to it, and I didn't have this line in the right spot. Once I moved that line, I realized, oh shit, we haven't broken out yet. If you would have taken this trade, guys, you would have been stopped out right here. Once I realized we were in this channel, I moved my stop loss way down here underneath the channel. And like literally before I could even post that in the group, it dropped like that. And so I lost a lot more than I should have. And so that happens to me too. And there's a lot of trades that I take that I don't even post in the group because they're too risky. Because once you get to the point where you're, I don't know, traded, 10,000 plus trades or more, and you tend to, like I have multiple sub accounts, guys, multiple accounts, probably 20 at this point. And I have a high risk trading account and I have a very low risk account. And I have a hodling account. In total transparency, I have hodling accounts where I don't trade at all and I just buy, and I buy every week. Buy every week. Same amount every week going into XRP and Bitcoin. And most recently, I started adding to Ethereum. And then I have the trading account. I have the sub account where I'm teaching and I have a certain amount in there and I'm willing to lose it all because I'm just showing people how to do stuff. Even though I tried to take as winning trades as much as possible, no matter what. The problem with that is I'm being forced to overtrade. I'm being forced to overtrade because I'm showing people how to do things, even during a time when there's really no trade setup. So imagine if you had to like trade right now with a gun to your head. Go ahead, trade. Which direction you think it's going to go right now? Place a trade. You're going to have more losers because it's not optimal to be entering at that time. But I do it anyway because I'm trying to give a demonstration. I'm trying to show someone how to go long, how to go short. So I have a risk account where I know that there's a good chance that that could go against me, but I'm going to show someone how to enter the position. So, and then I have a trade where I take it a little more seriously account. And then, but even me, guys, I mean, I'm not infallible. Sometimes I do the same thing I warn you to not do, which is I move stop losses out of the way sometimes. I move my take profit out of the way sometimes. I do that sometimes. And I will tell you this, sometimes it benefits me. But for the most part, if I really go back all the way to the beginning, it's never a smart thing to do. And I would tell you this, when I went to OTA, Online Trading Academy, they tell their students never do that. Once you've entered your position and you're using proper risk management, meaning you have your stop loss where it should be based on the risk management for that trade, you should not move it. If it hits, it hits. Oh, well, next. And you got to be okay with that. Joe says, never invest anything you're not willing to lose. Yeah, I mean, there's so many quotes and sayings and philosophies. The trend is your friend till the end. Don't risk more than you're going to lose. And we have those disclaimers, obviously, and we tell people that even on our webinars. But it's in one ear and out the other because people see the huge gains that some people are making and they think that's going to be them. It's kind of like, how many of you have ever wanted to be an actor or a movie star? And you went to acting class or you went and hired an agent and you got your headshots done. Do you know what the odds are of becoming a movie star? But everyone who goes into that thinks they're going to be the one. They think they're going to do it. You know how many people actually make it to professional NBA or professional? Now, do you have to be a professional NBA player to play basketball? No. All you need to do is go buy a basketball and go to some court. Start dribbling, start playing. Can you get better and better and better? Yes. You can get so good that you can make every shot. There's guys out there that the NBA don't even know who they are, and they can throw that basketball from the center court and swish it one right after another all day long because they practiced. They just got really good at it. And they're not basketball players. They're doctors. They're dads. They're nobody in the basketball world. They just practiced something until they got really good at it. And that is the same thing with trading. There are guys out there who are retail traders who make $1 million or more per year, and nobody knows who they are. And then there's guys who become famous traders and they get invited to speak on CNBC or the business networks or invited to podcasts to talk about it. And that's only because they promoted themselves or they made themselves public or they wrote a book or they're teaching or whatever. But most traders, no one knows who they are. And you know how I know that there's a lot of people making millions of dollars in Bitcoin? Because you can see the money on the blockchain moving. You can see it. And it's like, holy shit, someone just transferred $800 million from this wallet to this wallet, and no one knows who these people are. Like every day, dozens of times. And so anyway, I don't know where I kind of got off track here, but the point I was trying to make is that don't get down on yourself, guys, and don't beat yourself up. You should be here to learn, not to make a fortune in the beginning. Obviously, you join because you want to make a fortune and you want to make a lot of money, but you got to learn first and you got to pay your dues first a little bit. Not everybody. Some people pay very little dues before they get it. Some people take a little longer. Some people have to go through hell before they get to heaven. Some people give up before they make it. You ever see that meme where the guy's digging with an axe pick, and the diamonds are just like 3 feet in front of him, but he gives up and turns around before he hits the diamonds? You ever see that one? That's the way it is with life, guys. Most people quit right before they're about to be successful, right before they figure things out. And I can also tell you this: the ones who are successful, the only reason they are is because they didn't quit. The only reason, because had they quit any time up until that point, they would have never made it to the success category. So some of this is teaching you how to trade, but obviously sometimes I have to step off that and try to inspire and motivate. And I know it's hard to hear sometimes, but we got to take responsibility for the actions that we take, including trying to make money, including joining the program to begin with, including trying to get out of your comfort zone, including trying to take a risk on something. I've spent tens of thousands of dollars in education and going to boot camps and seminars and in-person workshops and all kinds of shit to learn stuff. And there's a lot of stuff I paid to learn that I never even pursued after I paid to learn it. Real estate, for instance, I probably spent, I don't know, 75 grand to 100 grand in workshops and boot camps to become a professional real estate investor, to learn everything there was to know about it. And even when I knew enough, I knew more than most, I still paid to go to more training, because you always think that you don't have enough knowledge. You always think there's something else you need to learn. You always think there's just one thing I'm missing. Maybe this guy has it. I'll go to his training next, right? There's always that. There's always those people who they're professional. They're professional education seekers, professional information gatherers. They just never stop. They never just do the thing that they're learning to do.
Those are moms.
So I say all that, guys, because I want you to realize that this is not a sprint, really. It's more of a marathon. And you arrive sometime in the future being successful and having winning trades. And sometimes you don't even notice it. Like you're like, oh shit, man, I made like 10 grand this week, or I made like 25 grand this month. And you're like, oh wow, when did that start? When did this thing start clicking for me? And another thing that happens, guys, is you get really good at this and then you start screwing up. Anybody explain that? You get really good at this and then you start having bad trades. You know what that is? We used to have people in our, when I had a call center, guys, I had like 150 employees, big giant sales office. And we had new people come in. They never did sales before, or they never worked for us before. They didn't know our script. They didn't know anything. We would take them into training. We would give them a 1-page script and we'd say, read this 10 times in a row. And then after they were done reading it 10 times in a row, we'd bring them out to the sales floor and we'd put them on the phone and literally let them take calls with customers. Not bad leads, good leads, the same leads everyone else was getting. They would just turn it on, and all of a sudden they start getting calls from customers. And we tell them, They'd be nervous as hell. We tell them, just read the script word for word. It's okay if you sound new. It's okay if you sound like you don't know what you're talking about. In fact, you can even say that to the customer. It actually is helpful if you tell them, hey, listen, I apologize, I'm new here. So forgive me if I don't know the answer to your question. Let me go get it for you. Don't ever try to make up something. Don't ever try to act like you know more than you know. Don't ever just be honest with the customer and say, listen, I'm new here. So bear with me. Let me just read this paragraph to you. Let them know you're reading. I don't care. And guess what happened? They made sales. They made sales because they were doing the script word for word. They were doing what we told them to do. And it worked. And then 3 months later, 4 months later, they have the script memorized. They don't need it anymore. And they've changed it around to suit their needs. Now they're adding their personality. It's no longer what they're saying, it's how they're saying it. They're throwing stories in there. They're building rapport with customers. And all of a sudden the sales are going down. And they're like, I don't know what I'm doing wrong. I'm doing exactly what I always did. And I'm like, really, are you? So I have the manager listen to them and monitor their phone calls. And then they discover that they're not reading anything that was on the script before. The script is like out the window. Now they're just shooting the breeze with the customers, and they're all over the place, doing saying all kinds of things, trying to be nice, trying to be just whatever, build rapport. And they're not making sales anymore. And what do? We tell them, go back to the basics. Go back to reading the script. Really? I'm way beyond that script. No, you're not. The script is what worked. That's why it was written by professional people who make sales. And so what is the script here, guys? The script is the basics. You go back, when you get off track, go back to the basics. When you realize what you're doing wrong, it's sometimes the easiest fix. And it's like, oh, because I've had people recently say, I've taken your trades, I've taken your signals, and I lost on the last 5 in a row, I lost this much money. And I'm like, how is that possible when I made 600 on this one, 400 on this one, I lost 100 on this one, I made 1,200 on this one. How are you taking the exact same trades as me and having 8 losers in a row when I had 3 losers and 5 winners or 6 winners and 2 break even? So the reason why is because you're not entering the exact same place I'm entering. You're not using the same metrics, stop loss and take profit targets. You're not moving your stop loss. And here's what I find the most when I get on one-on-ones, people. They don't move their stop loss to break even or in profit when they're in profit, because most of you actually go into profit at some point and then go back out of profit. That's what I see happening a lot. A lot of you, it will go the direction that the trade is supposed to go. You're happy for a minute because you're in profit, and then it'll drop back out of profit. Anybody have that happen to him ever? And then it'll go back down and hit your stop loss. And you're like, shit, I was in profit. I should have moved my stop loss into profit. I should have moved my stop loss to break even. And so I say that because TPs are great. It's great when the TPs hit. I love it when I post TP hit. There was a couple months ago, that it would seem like every single trade signal we gave hit the TP, but not always, and certainly not lately, because we're in an environment right now when we are at the top of the market. We are at a top, guys. 123, 124, pulling back down to 112. 112 was the top for a while. 112 pulls all the way back down to 108 in retest. 108 was the top for a while. We pull all the way down, when we were at 112, I'm sorry, when we were at 109, we pulled all the way back down to 75. 73.8 was the top for a while. So whenever we hit a top and we're in between the top and the previous top, meaning we're coming down to retest a support, it's volatile. It's up and down. It's heading down maybe, but it's going up. It's going down and then going up a little bit and going down a little further and going back up and then going down a little further. So this is really not easy to scalp. It's not easy to be in little short-term trades. Sometimes you have to wait and sit on your hands. And I think my advice now, and I'm getting, my point that I'm getting to is that I think when we're in these little tight areas right now, when we're between the all-time high and we're waiting for a breakout to make a new all-time high, and all of these things that we would normally call what are they called? Catalysts, major catalysts out there. Donald Trump doing this, the Federal Reserve doing this, the interest rates this, all this stuff. Whenever we have these major things, these announcements, Michael Saylor buying $200 million of Bitcoin, all these things that are huge catalysts, and the price doesn't do anything, it makes us wonder what the hell's going on. How can $1 billion worth of Bitcoin be bought and the price go down? Can anybody answer that question right now? Simply, because there is a simple answer to that. But I know it's perplexing when you first think about it.
Because they're buying and selling at the same time.
Yeah, I don't. It's either they are buying and selling at the same time, or someone's selling at the same time. Somebody's selling at the same time, but is it the same person that's buying? Maybe, maybe not. And how could they do that? Well, that's because they bought $1 billion at 112. It went up to 120. They buy another billion and sell the first billion, taking the profit from the 112 to the 120. And they buy another billion. They're taking $1 billion profit off the table to buy another billion. And so what happens to the price? Nothing. Doesn't go anywhere. Why would they do that? Why take $1 billion? Why sell? If you're in at 112, why not just stay in? It's like asking a police officer at the end of his shift why he pulled you over. Do you really want to do paperwork for another 2 hours? Why didn't you just let me go? Well, maybe that's not a good example, but if you get to the bottom of it, they have a quota. They have to take profit, guys. They're not in it to accumulate Bitcoin, not the hedge fund traders, not the big money traders. They're in to make a profit. And what is profit measured in?
Dollars.
Dollars. Wow. Thank you. So me personally, I'm trading to accumulate Bitcoin, but I also trade in USDT to accumulate dollars. But also, I would probably, I mean, there is this perplexing question people ask me every once in a while, but Nico, if this is the top, should I convert my Bitcoin to USDT or sell it to take the profit and then buy back in when it gets back down low? That sounds logical, right? And I would say that if I had a crystal ball and I knew exactly when the top was in and I knew exactly where the bottom was going to be, I would sell at the top and buy back at the bottom. That sounds logical, right? Everybody wants to do that. But what if you sell it at the top because Nico says it's the top, or anybody for that matter, but let's just use me as an example, and it's not the top and it shoots up another 20,000 higher than that after you sell everything. Then what? Are you going to buy back in at a higher price now? You're going to send me death threats? Because I can't know everything, guys. I don't know. There's powers and there's wizardry going on behind the scenes with people with billions of dollars that I know nothing about what their plans are and what they're up to, or what they could do at any given moment. So what we do is we look at the charts, we determine on the 10-minute, the 1 hour, the daily, and the weekly time frames what's the most likely thing to happen in the short term. And it doesn't matter if you're swing trading or scalping, it's short term, unless you're holding a position from 2023 still. And we do have someone in this group that I think is. I don't know if we've talked to him lately, but we do have someone that went long at 28,000. And they were up 4,000 or 5,000% when it was at 40,000. I don't know if they're still in that trade or not, but because they switched to 100x leverage after it went past 33,000. It never went back down to 33,000. But so for the most part, most of the trades are in the short term. They are short-term trades. If it's an hour, that's a scalp. If it's sometime intraday, that's scalping, somewhat scalping, but it's also day trading. And then you got swing trades and more longer-term trades, dailies, weeklies, things that last months. I know a guy who had, I think he had like 1.3 million long on his margin. And he was at 5x or 6x leverage, very low. Like leverage, this is what happens, guys. When you have more money, you use less leverage. You don't use 20x or 30x or 50x. He had 1.3 million long on his margin at like 4 or 5x leverage. So he was trading like $7 or $8 million contracts. 1.3 million times, I believe it was 4x. So he's trading 5.2 million. And he went, I think Bitcoin went, I think this was probably around the 50,000 range, and it went up to 73, 80 to 80,000 after 73. And he was up like 20 some $1 million. But he was in that trade for like 6-7 months. When he closed the trade out, his closing fee was 30 some $1,000. Now, will that guy scalp? Will that guy day trade? No. He's waiting for the big moves. He's waiting for the bear market bottom or the bull market top. He's waiting for the right now. He's waiting. No, don't get me wrong. I shouldn't say that. I think he was ready to go long at when we broke 112. Because that would be the last parabolic move. That would be the last push. So, according to him. And that doesn't mean going to 123 or 124 was the last push, because we're coming back down to retest 112 right now. But it could be 150, 160, 170. But this year, guys, probably if bull markets and bear markets continue to be a thing, then the rest of this year will be the rest of the bull market. Probably going right to about January 1st. And there's another thing that some of you know already, and I will share it again right now just for the hell of it. Let me just see. And I say this also with hesitancy because it may not always be the case, but right now, so far, it's the case. As you can see here, this is previous bull market here. No, I'm sorry. What am I saying? I'm on the daily. Let me just go back here. This is previous bull market here. And we hit the top, went into a bear market, hit the top, pulled back this was like 3 months right here, this downward trend. And then we come back up, hit it, pull back, come back up and hit it, break through, and then hold as support. And where did we hold as support? We held as support on the 112, which is this one right here. This is the first time since 2021 that we broke through this upward trending resistance and of holding above it as support. Is that guaranteed to continue? Maybe we broke through it and this was the bull market run up to 124. And now we're coming back down, creating an M pattern right on top of not only the 112 support, but this upward trending. Because it's not just the 112. A lot of you see that on my other charts that we just have this 112 here and we're bouncing on 112 and everybody's planning on this big move to the upside. But this 112, look at this, 112 is right at this convergence, right where this line comes up from way back here. And we bounced on it, wicked below it to 112 and came back above it here and then wicked back below it. So technically we are back below this line. Let me just change the color so we can really see it. We're back below the yellow line. Is that good? I mean, it's good, it's bad, it's not good or bad. It is what it is. But could that mean that this upward trend is just maybe this is it? It could, yeah, it could. But I don't like to think that way because when I will tell you when I think we're going into a bear market, and I haven't said that yet. But what I do, and some people don't like that I do it, is that because I'm not doom and gloom. What I do is I tell you, I give you all the possible scenarios, good and bad. We need to stay above 112 to prevent dropping to 100. And we need to stay above 100 to prevent dropping back down to 70. I know that seems so far away. But that would be the chain of events if we were going to if we were starting to descend into a bear market. But even coming to 170 doesn't mean, I mean, even coming to 70 doesn't mean a bear market, guys. It would not. It would not mean that. Now, if we went below 70, that's a different story. But we could certainly drop back down and retest this level also before going to even a higher high. But I would say we need to stay above the 112 for now in order to have a run up in the very near future. Otherwise, we could come all the way back down to 103, 104, retest this level here, maybe even somewhere. Of course, that's if we get below the 108, 109 level. And so there's levels to this. So I don't really worry about it until that happens. But let's go to the 12-month time frame, because I've talked about this before. And this is the only way to really know it. And that's just, there's no real disputing this. You can't dispute this until it changes. You can't dispute this because so far throughout history, this has been the case. On the 12-month time frame, which I'm sorry, I'm on the 6-month. Let me go to 12-month. In the 12-month time frame, the fourth candle, this one right here, this is the top of the bull market. This was back in 2013. Boom, we hit the top. Count 4 candles. 1, 2, 3, 4. By the way, this is 12-month time frame. So each one of these is a year, takes a whole year. 1, 2, 3, 4. That's the top. This was 2017 bull market. This red candle is the bear market. So count 4 from this top. 1, 2, 3, 4. That was the top in 2021. Count 4 from there. 1, 2, 3, 4. We are in the fourth candle right now, and we have 4 months and 7 days left. All right, so we could go up higher to 140, 150, 160 in this candle. Go up a lot higher. If I just go to the tops of all these wicks, these wicks and this wick, shit, we can go all the way up to 2 something and still be in this candle. But what I'm saying is that once this candle prints, meaning the next candle starts, which is in 4 months and 7 days, whatever this candle was, whatever the top was of this candle is probably the top of this bull market. Only because so far that has been the case since the beginning of Bitcoin. Now, is it possible for that to not be the case and all of a sudden that changes? Yes, but it hasn't happened yet. So I don't base my decisions or my opinions on what could happen. I base them on what has been happened historically. So I personally would bet that on the 4th month and 7th day, when this gets down to 0 or 1 day left, I will probably be shorting no matter what is going on in the market. Because I will come to the conclusion that whatever this candle is ending on, by the way, here's another weird thing about that. A lot of people are like, so that'll be the top whenever this candle ends? No, that won't be. Whatever it was at the top will be the top. You see this one here? It went all the way up to 69K, 68.8, and came all the way down to 46 before it printed. The next candle started. So this was the top, but it was still in this candle all the way back down to 46K. And then this candle started and it actually went up a little bit to 48, a couple thousand before dropping in the bear market. So like this one went all the way up to 19,000, 19,600, came all the way back down to 13.9 before the next candle printed. So just because this candle prints, whatever price it prints at doesn't mean that's the top. It means what the highest it was during its time was the top. And that's according to history so far. If something changes and this happens where the next candle prints and it goes higher than this candle on the 12-month time frame, then that will be an anomaly. That will be the first time that's ever happened. And then this little theory that I have here on the 12-month time frame will be over. We can't even count on that anymore. But so far, it's always been the case. Bull market, 1, 2, 3 years to the top, 1 year to the bottom. 1, 2, 3 years to the top, 1 year to the bottom. 1, 2, 3 years to the top. And we also know from looking at the 4-year time frames, that's in between these lines. It's a 4-year cycle every time. So 3 years to the top, 1 year to the bottom. 3 years to the top, 1 year to the bottom. 3 years to the top, 1 year to the bottom. 3 years to the top. Guess how long we've been on our way to the top from the bottom? Well, let's just go and look. We were at our bottom at 15.5 on August 11th of 2022. 3 years ago last week. So we're in that top realm. Could we get another push to the upside? Sure. Yeah, we can go to 150, 160. In fact, the Fibonacci is telling us that that's also something that seems to always have happened, is that we've always hit the 1.6 on the fib. And so if that holds true, see, all these things that have always happened can't all continue to always happen because some of them contradict each other. They can't all always be true. You see this one right here? This down here was 2013 bull market. We went to the 2.36 on the fib. In 2017, we went to the 2.36 on the fib. So the first two bull markets, we hit the 2.36, which means we also hit the 1.6 because it's before you get to the 2.36. Here's phase 1, phase 2, phase 3, phase 4, and phase 5 of the bull market. Phase 1, phase 2, phase 3, phase 4. In 2021, we hit the top of phase 4, which is 1.6, but we did not make it through to the 2.36. This was the only time in Bitcoin's history that we had a bull market that did not make it to 2.36. So that proved right there that we don't always do it because we didn't do it here. But we did always still make it to the 1.6. Here we made it, here we made it, here we made it. And here we are in 2025, phase 1, phase 2, phase 3, phase 4. We are in phase 4, and the 1.6 is up here at $176,000. And we're more than halfway through it. I mean, we're at 120, right? We're at 120 something. Well, right now we're down at 112 again, but if we can't get to the 1 point, I mean, if we need to get to the 1.6 just to do what we've always done. But is it possible that this time back here in 2021, we didn't make it to 2.3, but we made it to the 2.6? I mean, the 1.6, which is always done. But maybe this time we don't even make it to the 1.6. Is that possible? I can't say it's impossible because it's done it before where we didn't quite get to the 2.36. So maybe the next one down is the 1.6. But we're almost, I mean, we're close to it. We got close to it, went to 124, another 50 grand, and we would have hit it. And we still have 4 months left of this bull market. So technically speaking, we still have time to hit it. And a lot of us are hopeful that we're going to hit it. At least the 1.6, because it's always done it. But if we were back in 2017 right now, and I was looking at this, I would be like, hey, we hit the 1.6 and the 2.3 back here. So chances are we just went through the 1.6. So chances are we're going to hit the 2.36. And then in this one, I would have said, we hit the 1.6 and the 2.36 2 cycles in a row. So chances are we're going to hit it. And we hit this one, we hit the 1.6. And then so I'm thinking we're going to go to the 2.36 because we always did it. And this time we didn't. Lots of reasons, maybe. We had COVID, we had the FTX scandal, all kinds of bad things happened in crypto land during that time. And we tried, we came back up and hit 68 and double topped and then fell. And that was it. So, but here we are. We got through phase 1, phase 2, phase 3. We're in phase 4 right now. Bullish, 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 all kinds of positive indicators, all kinds of catalysts. President Trump, all these good things, crypto related, FTX, I mean, not FTX, XRP, all of these positive things coming around for crypto. And yet we're still having a hard time getting above this little center spot right now. But then I have to ask, are we really having a hard time, guys? Or is this just normal consolidation? It just takes time. It takes weeks. It takes months. We go up and make a new high, then we consolidate. We go up and make a new high, and then we consolidate. That's just the way it is over and over and over again. And I think people get so complacent that they forget that. Every time there's a big dump, people are like, it's over, Bitcoin's over. Every time this happens, it's the end of the world. People, they're done. They're done. They're pissed off. They bought up here. Most people buy up at the peak when there's lots of feverish talk about it and everybody's excited, and then bear market. They don't ever buy here because here they think it's going to go lower. And then right up here, when everybody's excited again, they start buying again, and then boom, drops again. People are like, I can't do this. This sucks. It's a scam. No, it's because you're buying high and selling low. Start buying down here. This is the best entry in the purple. And now you know this stuff, guys, and now you even have this stuff. I mean, we have this chart as well. It's called the rainbow chart. It's in our group as well somewhere. And like here's the problem with it though. We have diminishing return. So back here, the highs got all the way past the red zone. The lows down here in the purple and blue. The highs, orange, dark orange, red. Lows, blue, purple. This one, we didn't even make it to the red. We got to the light yellow and the dark and the orange, but not the really dark orange. Double topped in the yellow. Still came down to the purples, the bottom. And then we're climbing up, and so far we got up into the green. That's where we're at right now. We're in the darker green. We didn't even make it to the light green yet, or the yellow, let alone the orange and the dark orange. And we're still higher than here, price-wise. So is it possible that we don't make it past the green? We could still get up to 170, 180K and still be in the green. And that does make sense to me. But then when we come back down, we will be back into the purple again. And guess what? We could be in the purple and it will be 90K. That could be the bottom of the next bear market before we go into the halving, right? Somewhere in here, guys. Somewhere in here at the end of 2026, which is a year from the bull market top, going into 2027, when we see the price down here, this is when you long with confidence that that's probably the bottom. And even if it drops 1,000 or 2 less, like here, when we called the bottom at 17K, it dropped down to 15.5, which was a little lower, but it was still considered the bottom. Any entry in this zone right here is a fire sale. It's a Bitcoin is dead, basically a fire sale. That's when you do it. So if you didn't trade throughout the whole year and all you guys did was wait for the bull market top when we're saying that the bear market is in, and you just short it, and then when we say, okay, I think the bear market is over, I think the bull market is starting, and you just get out of that short and go long, you would have 2 trades during the whole year, and you'd probably make way more money than you would all of this in and out scalping. But in order for you to know how to do that, in order for you to be ready for those kinds of big moves, you have to at least learn the basics. And scalping and going long and going short and setting stop losses, take profit targets, and making some money along the way is part of learning. So keep that in mind, that you're just practicing right now, guys. You're just sharpening the sword. You're sharpening the knife, waiting for the opportune time to make the biggest amount of money. And yes, there are people in this group and some of us who have had ridiculous gains, even on all these little moves here and there. And that does happen. And when you're really good at it, you can just open your eyes from being dead asleep and look at the chart and know, and place an entry, knowing what's about to happen. But when you're not there yet, then you shouldn't be risking a lot of money. It's okay if your stop loss gets hit. And if it does, you should have just lost a tiny bit, because you shouldn't be risking a lot. But unfortunately, what I see a lot of people doing is they're swinging for the fences. They're trying to hit home runs, and they're doing it with a large margin and high leverage because they really want to maximize a gain. Or, guys, you do realize that if you have $1,000, you started in this group, and let's say you put $1,000 in your trading account and you lost half of it because you had a bunch of trades that didn't go your way, and now you're down to $500, you only lost 50%. Not only, that's a lot. You lost 50% of your account balance. But in order to make back the $500, you have to make 100% because you only have 500 left. You have to make 100% just to break even. I don't think people really understand that. If you have 1,000 and you lose $500, you lost 50% of your holdings. If you want to get back to 1,000, you have to double your 500. That's 100%. You have to make 100% to get back to where you were. How's that even possible? You lose 50% and you're down half. If you gain 50% back, you're only up to $750, not 1,000. You got to make 100% just to get even. It's math, and I know that's hard for some people, and a lot of people brain hurts when they think of math, but drawdowns suck, guys. You've heard the terms called blowing up accounts. Blowing up accounts to me doesn't mean that you lost everything necessarily. I mean, you could have $10,000 and go down to 2,500 because you had a bad trade with no stop loss and you were on cross leverage instead of isolated. There's all kinds of things you could be doing wrong to cause that to happen. You get liquidated. But you still have 2,500 in your account. So technically you didn't blow your account down to zero. The term comes from stock trading when people got margin called and the stock platform, the trading company was basically calling you on the phone for you to deposit money. You actually owed them money. So, yeah, we don't want to get in that position. The good thing here is you can put stop losses and just practice the skill, get better, get better, get better. And then you're losing less, you're taking less trades. And I think that's what I want to encourage here, guys, is when we're in a bear market bottom or a bull market beginning, there's going to be a lot of trades. Be a lot of long positions. There's going to be consolidation and pullback periods. But when we're at the top of a market, I think we need to kind of slow down and realize, okay, wait a minute. Wait for the proper trade setups for the big moves to the upside, which in our case, in this case, it would be we need to break out. We need to have a really good trade setup. Just breaking out of this, just bouncing off 112 doesn't mean as so much as breaking an all-time high. But if we get up and break the 124 up here, that would be considered a breakout move. But the last time, look at this. We were at 123 here. And when we finally broke out of that all-time high, we only popped up a little bit to 124. That wasn't something extraordinary. And if I go back and I show you all the times when we had an all-time high right here, 108, and we finally got up to it right here, 108, boom, we waked up to 109 and then we dropped. Here we got up to 112. I should say we got up to 109 right here, boom. And we broke through and went to 112, barely getting higher. And then we come back down. So just breaking new all-time highs, especially when we're up here in no man's land, it's no man's land, guys. We don't have any technical analysis. We don't have any price action history going back to look at what happens or where all the support and resistance levels are because we've never been this high before. And so all we have is this little section right here to look at above 112. This is it. This is our trading history above 112 right here. And what it looks like to me is just bull flagged it, broke to the upside and came back down inside of it. And we're bouncing on the support right now. So sometimes I feel pressured, and Chad even probably sometimes feel pressured to give signals. And there are signals, don't get me wrong, there are trades to be had, even on these lower time frames and then on the scalps. But you got to be so precise sometimes, because if you just see my signal an hour later, or you see it right away, but you don't enter it right away, you're not going to get the same entry as me. And if it does go 10% into profit, and and we move a stop loss to break even, and it turns back around and hits my stop loss, I didn't lose anything, but you might have, because maybe you got in 20 minutes later, and where I moved my stop loss, you wouldn't even be in profit at that point. And so it's very difficult for me to give scalping signals, because by the time you see it, sometimes it's too late. So I'm hesitant to even do it. But there's a lot of you that do scalps without me giving signals, proof and indicated in the wins wall, nonstop wins over here, big ones. And some of these might have been signals. I don't know, because this one's Bitcoin, this is XRP. I did give a few of those over the last week, but a lot of times they're not. They're not signals that I gave. Link, Solana, ADA, Meme, SUI, or SCI, Jupe, LTC. I mean, a lot of these, I'm not trading in any of these. So, who is this? Jake killing it.
Jake's killing it. He's killing it with, he just uses the RSI. He just looks for the RSI to get overbought or oversold twice in a row, and he starts paying attention. He's killing it.
Yeah, look at this. I mean, this is quadruple digit gains. 1, 2, 3, 4, 5, 6, 7, 8 above 1,000%. 9, 10, 11, 12, 5,000%. Guys, get Jake. Where's Jake? Is Jake on this call?
I don't know if he's on this call. He hasn't been present in our group very much lately.
Yeah, you know why? Because guys, once you figure this out, you don't need me, and you don't need to hear me ramble on for 3 hours. Once you just get it down. But I do want to get him on a call, and we could do, and basically what he's doing, guys, and let me just go back and show you. And this is stuff we teach and what you can learn. I go over the RSI all the time. This is the stochastic RSI, but I do it on the higher time frames. Let me just look at some of those trade signals.
What time frame is he doing it on?
He's on the 15-minute. I recorded a video with him once, and a lot of folks in the group tried to follow him, couldn't follow him, lost money, and they attacked him in the DM. So
yeah,
he's kind of disappeared because of that. So
this is a problem, guys. So when you see a trader in our group, sorry, Bill, I didn't mean to interrupt you. When you see a trader in our group like Jake, what usually happens is new people, or old people or new people in the group will start DMing him saying, "Hey man, I saw all your trades. Nika was talking about you. Can you show me how to do this? What are you doing?" And that person now gets bombarded with other members, and then they disappear sometimes because they're not here to teach, for one. They're not getting paid to teach. They're here to learn, and they know they learned something, and now they're getting bombarded. And there are some of you, don't get me wrong, there's a lot of you that don't mind helping at all. And we'd love to set up a call so that you can actually have your own call and pay you to do it, just to help other people. We don't mind doing that, especially if you've proven something, you've proven yourself, and you've gotten to the point where you figured this out. But what this is, guys, is trend trading, basically the RSI. And these are big moves, by the way. These are big moves, but not really. Some of these are just high leverage. So let's just look at this. But when you're confident in the direction, you can go high leverage. He's also on MEXC, where you can go over 100x. I don't recommend you do that, but if you know what you're doing, you can do it. Look at this, MEXC, up 500x leverage. That's the only one that you can go that high leverage, but that's very dangerous, guys. So don't kid yourself and think that, oh, you're going to make a lot more money doing that. You got to know what you're doing. But yeah, he is high leverage. But so let me just go back and show you real quick, and then we got to wrap the call up. I got to call here at 1:30. And if you're new, make sure you want to get on the onboarding call at 2 o'clock. Well, let's just go back here. And so I'm going to go down to the 15-minute time frame. What he's doing is on the RSI. This is the stochastic RSI. He's probably using the regular RSI, but let me just show you. You see, when a blue line crosses the orange line to the downside, right here, you see this blue line crossing the orange line to the downside. And you see this grayed out area here on the stochastic RSI. That is the 20 to the 80. In between the 20 and the 80 is the RSI. When you get above it, you're overbought. When you get below it, you're oversold. Generally speaking, when you get down here, guys, I mean, just look at the dotted line going up to the price. First of all, as soon as the blue line crossed the orange line to the downside, boom, we drop. When you're overbought and the blue line crosses the orange line to the downside, overbought, dump. And look how far this one dumped. It dumped all the way down to oversold right here. As soon as you start to see this turn, you need to get out of any shorts. You should have already been out here somewhere. And you wait. What are we waiting for? We're waiting for it to break. Well, right about here, the blue line crosses the orange line back to the upside. And it was probably down here when that happened. Boom. And it popped all the way up from, this is Bitcoin, 110 to, 112. So that's a $2,000 move to the upside right there, just from here to here. Right here, look at this. Blue line crossed the orange line to the upside, all the way up. But instead of looking at the price, you see this only went up to here. You might think, well, that wasn't a big move. What he's looking at is the RSI. So once the blue line gets up here and crosses back over the orange line, he gets out. If you're just looking at the price and you're not looking at the RSI, then you might think this is going to continue up and you stay in, or it comes back down and takes you out, hits your stop loss. So this is just fine tuning, guys. This is you. Once you understand the basics, you know how to get in and out, you know how to take trades. Okay, so what if you lost a couple here and there? Now it's time to go to the next level and maybe learn a strategy. And then we don't teach strategies right from the beginning, because you got to know what you're doing, why you're even doing it first. You got to understand what's actually happening first. You got to understand support and resistance first. And that doesn't mean that this is infallible. Like the blue line crossed the orange line to the downside right here. And both of them are now crossing over the dotted line, which is the 80 on the RSI. Generally speaking, if you put a gun to my head and I had no other information other than this, I would say we're about to drop. That's what I would say. And also, it just so happens, because I have trend lines drawn like this one, that it's not only coming, it's the RSI is not only showing that we're dropping here, but we're also doing it right after hitting this. Right after coming up and hitting the top of this resistance level. Boom. Which is the top of this channel. Which before, every time it hit it, it fell to the bottom. With the exception of right here, it hit it with the exception of this time right here, where we went all the way through, all the way up to 124.5. That was when we hit the all-time high, but we came all the way back down and went right through it and then retested it as resistance. Came all the way to the bottom again, probably. I might not have this bottom line in the right spot. It probably should be right there. And so we got support, hit it, fell again. This time we broke out of it, came all the way back down, fell right back into it, and then retested as resistance, fell again. Coming all the way to the top of it, hitting as resistance. Are we going to fall again for a lower low? Well, if you were RSI trading, you'd be short right now. I'm not saying, look now, because it's possible that this does break through right here. And what would happen here is the blue line would just kink back up like this and cross back over. But usually before that happens, there's a big drop.
Nico, is he using the stochastic or the RSI, just regular
Probably
RSI?
just the RSI. Let me go and show you that.
He's using just the regular RSI. What he looks for is two strong punches into overbought or oversold in a row, and then especially if it kicks in a divergence.
So this
Divergence with which other indicator?
So right there on the screen, you can see where we had two solid punches below the 30. And then what's price action? Price action is headed down, but the RSI volume is headed up. So there's two strong punches in a row to the downside, and then a divergence, and he would have entered. Does that make
Divergence
sense?
with price then.
Yes.
Okay. Thank you, man.
Yep. Very simple, but you're going it's not, and there's more to it than this. You know, he's on cross. He's not using stops. It's very complicated what he says, a little bit more complicated than this. what he's doing, but it's
So it's a
working
little
for
bit
him.
more risky then.
The way he runs it, yes, it's more risky, but I think that that's a strong setup, looking for two strong punches into overbought or oversold territory and then a divergence. I think that's a very strong entry. You know, you're going to do really well with that. It's similar to what Tom Hogard trades. Tom Hogard trades RSI divergences as well.
Very interesting. Thank you.
Of course.
What we'll do, guys, I got to wrap this call up, but we will set up a training just on this. And let's just set it for Wednesday, my next call. And I will try to get him on. If not, we will talk about it more specifically and go over it. But it's just one of probably 100 strategies. The guy who made the most money in this group so far as a member didn't do that strategy. So don't think that there's only one way. There's a million ways.
Yeah, there's a lot of ways.
Yeah,
and most of it goes down to risk management. Most of it comes down to managing your risk.
Yeah. And
Nico,
so,
if I,
yeah,
if I
go ahead.
may I kindly ask, with the different ways to do it, I understand you and Chad do it differently. May I kindly ask what determines one's preference over the other? Because I'm learning both of them, but I'm trying to understand what's the temperament that one learns your style versus learning the one that Chad does.
Yeah. I am more, I'm okay with risk. And I don't mind the action of scalping. Chad has no desire to trade on the short time frames, on the lower time frames. And he doesn't like the fast, constant, in and out and worrying about it and stressing over it and staring at the charts. He'd rather wait for the proper trade setup and wait for a breakout and then give a long position, and he can go out and do what he does. Either going to do it's either going to hit the target or it's not, but it's more likely a lot of times they're safer trades, and those are bigger moves in the market, and they're on the higher time frames. And now I could take 10 trades in between Chad's one trade, let's just say, for an example, and I could have 5 or 6 losers and 5 or 6 winners. And I could make an extra $1,000, $2,000, $3,000, $5,000 while I'm waiting for those big trade setups. But I also take those trade setups. I also take the bigger trades and the swing trades. I see on the chart myself, on the daily or the hourly or the weekly, I see the big move that's getting ready to happen. In fact, we go into my signal channel. Not that long ago, I was posting this, showing you guys the 4-year altcoin chart getting ready to break out. I mean, I don't talk about it on a regular basis because we were nowhere near that happening. But once we get to that level, when it's about to happen, I start talking about it because I want to take advantage of that too. And those are big moves. I can't remember where it was, but not that long ago. You guys probably remember me sharing it and talking about it if you've been in here for a while. But it was only like a couple of weeks ago, actually. But so I'm waiting for those moves too, but I'm more like antsy. I like to trade. I like the action. I don't get stressed out. I could be closing on 2 multi-million-dollar properties in the middle of trades, have a webinar, have to do a podcast tomorrow, and have all this shit going on. And my girlfriend looks at me like, how are you so calm? I take my blood pressure. It's normal. Everything's fine. I sleep like a baby. I don't get stressed. Like, now, don't get me wrong. I used to. There were years ago when I would stress over little things, but I don't feel it anymore. I'm like numb to it. So to me, it's no big deal for me to get in a riskier trade. Chad doesn't like it. So there's 2 different styles there. Now, what also comes with risk or high risk? Higher reward. So on some of these risky trades, it is true. This was Ethereum. going all the way back. This is like a year of hitting this resistance. So I show this stuff too on the daily time frames, but with higher, some of the biggest money I've ever made, guys, the most money I've ever made in the shortest period of time, I was risking the most, and I was doing something I shouldn't have done. I have to admit it. But is that smart? No, it's not. Right. But also during that time, I didn't have kids I'm putting through college. I didn't have a wife. I didn't have anybody depending on me. So everybody's coming from a different perspective. When you're a single guy and you got money and you don't care about risk and you're okay losing because you just start over and no one's life is affected by it except for yours. That's a different mindset. That's a different perspective to come by. But if you're a family man and you got kids you got to put through college and you got a wife depending on you and you got all these things and all these obligations, you cannot be out there risking, your life savings or anything. You can't move all your money from your 401k or from your retirement account to try to go, hit a home run on Bitcoin's futures contracts. I mean, let's be real, right? But so we do both in this group. We have long-term trade setups, swing trading, and we have scalping, and we also have members' ideas, and the members' ideas are all over the place with both swings and shorts and scalps. But a lot of these trades you see in the wins walls, people making multiple double and triple and quadruple digit gains, those are probably scalps. I would say most all of those are scalps. Short term. Bill, would I be right that? I mean, most of those are short term trades.
I would think so. I think most of us are looking at EMAs and RSIs and trying to pick up trades. Yeah.
Yeah, so there's nothing but, and guys, I mean, the big money, they don't scalp that much. They're waiting for the proper trade setups. Chad is more calculated. He's sitting, waiting for the right trade setup. And it's more accurate. It is more accurate to do that. It's safer. And if that's your personality, then that's what you should do. You should sit on your hands more often, trade less, and wait for the big moves. And there's nothing wrong with that because you can make more money. You can make as much money or more money than the person who's trading 20 times a day. Because the person trading 20 times a day is over trading. I will promise you that. I'm not trading 20 times a day. I'm maybe one or two in and out trades per day. Have there been times throughout my life in my history in trading that I would trade 20 times in a day? There was times I would trade 100 times in a day until the sun came up. No sleep at all. There was times when I was in the zone and I was just pulling money out of the market like I was crazy. And then I realized that the times that I gave a lot back, the times that I had the big losses was because of that, also that same reason. So you finally calm down after a while and you learn your lessons and you start to realize, okay, what is my goal? What is my ultimate goal here? What am I trying to accomplish? Am I just trying to trade a lot or do I want to make a lot of money? And then I'm like, okay, well, some of the big safer moves yield the same results without me having to stress and trade a million times waiting for that. I could have just sat on my hand. But my problem is I feel like I'm being not productive if I'm waiting for big moves. Sometimes I feel like I should be trading, right? And we all have that problem, especially if you're new here, you want to make a lot of money quick. And so anyway, what I need to tell you guys is that you can make a lot of money here quick and you can obviously lose. So you got to be careful. And I really don't know of anything else out there that you can make as much money in a shorter period of time as what we're doing, but you got to understand the rules first. Okay. If you ever play those video games where you got to jump over a pit filled with snakes, and then you got to get around the samurai with swords, and then you got to get through the three-headed dragon, and then you win $1 million. Yeah, it seems so simple.
I appreciate the answer. Thank you, sir.
Yeah, but once you know exactly how to get around the dragon and over the pit and through the snakes, once you've done it a couple times, you can do it over and over and over again and laugh at the dragon and laugh at the snakes. So every once in a while, you're going to be careless and slip and fall into the pit. On the video game, you lose a life. In trading, you lose a few dollars. But you get back up and you're like, okay, this time I'm going to avoid the pit. And then eventually you get to the point where I'm not going to trade that way anymore. I'm going to wait for the dragon to go to sleep. I'm going to wait for the pit to be filled in with dirt. And I'm going to see that perfect trade setup. I'm just going to go for it. So I know I gave a lot of analogies, guys, but the The point is that I think that it's just fine tuning things and finding your style, because we each one of us have a different style, and some of us are like fearless. What's his name? I shouldn't say what's his name. TJ, who's made multiple 7 figures in this group in 1 year, was a scalping maniac in the beginning. Like lots of trades daily, up all night. But he's also an admitted gambler. He loves the action. He goes to Vegas. He lives in Vegas. He goes to the casino in between trading. Some people just live for that. Some people love that fast action scalping stuff. And he made a fortune trading. And
he won a contest not too long ago. He was up like 21 hours in a row and beat everybody. Won a bunch of money. He's awesome.
He is. But that's a different personality. And not everybody's meant for that kind of stuff. Some people love it. Some people thrive on it. So find your niche. Find what it is that makes you feel good at home and comfortable, that you can do, especially if you have another job or another business that you can do and you can trade, and you don't feel like you're constantly chewing your nails. And you don't feel that FOMO. Like if you see a signal from me and you just can't do it, or you're busy or you're at work, you don't have to have FOMO, guys. And then later on, you see that maybe it worked out really good. And, I'm like, put your stop loss into profit, because you guys see me post that a lot, right? Move your stop loss into profit. When you see me do that, you feel, if you didn't get in that same trade and you see that it's in profit, you might feel that you missed out. Stop feeling that way, because there's another signal coming tomorrow. The market's going up and down every day. You're not missing anything. And it's going to continue to do that forever. Well, maybe not forever, but probably as long as we all live in this group. Until, they've convinced us that the aliens are here and changed something. I don't know. But the stock market's been going on for over 100 years. Day traders and trading has been going on for a long time, guys. And crypto is just the latest, newest way to do it. And so futures contracts, very similar to options trading in the stock market. With leverage, it's a whole new game. With decentralized platforms, it's a whole new game. It just makes it easier. It makes it easy to win and makes it easy to lose. But when you get good at winning, you will just become a consistently profitable winner. So just get good at it. Don't beat yourself up. Understand, roll with the punches. Understand that there is some losses here and there, but don't let that hurt you. And when I say don't let it hurt you, there's 2 things. Don't get upset when it happens, but also don't let it happen with large amounts of money. If you don't know what you're doing, you should not be risking huge amounts of money with high leverage. Get to know what you're doing first. You do that with a small amount of money, with low leverage. Have winning trades. Get consistent first. And then deposit more money. Then once you've got a winning track record, 10 trades in a row, or 7 out of 10, or 6 out, I don't even care if it's 5 out of 10, but your winners far exceed your losses. You become consistently profitable. You take 10 trades and maybe 5 or 6 were winners and 4 were losers, but the losers were tiny and the winners were big in comparison. And when I say big, I don't mean money wise. I mean percentage gain wise. Because you can have 100% gain with $10. That's what I mean by getting good at it with money you can afford to lose first. Get good at it with money that you're not going to lose sleep if you lose $30. But if you lose 300 or 3,000, that's painful. I get it. Or 30,000 for that matter, because I know there's some of you that are on way different levels. We got yelled at, not yelled at by a member, not really yelled at, but set straight, I should say, because we sent out an email to our email list of traders saying that the reason you're broke in trading is because you're doing this wrong. And this guy responded and said, who said I was broke? And he sent a screenshot of his trading account with over $2 million in it. You got to be careful. There's a lot of people in here who do quite well, and no one knows who they are. They don't want anybody to know.
And that's wise. There's too many people that share their personal business in the Discord, by the way. Usually
those are the people that are broke. The people that are constantly complaining about, oh, I'm lost, I'm losing. They're not. We understand it. Don't get me wrong. I'm not being mean to anybody. We understand it, but that is a different mindset. Once you get this down and you're winning, you're not complaining, obviously, or you're not complaining when you lose. And I'm telling you, these winners who've made hundreds of thousands or even millions, they've lost Maybe we should ask TJ how many times he's lost trades. But does he care about that so much?
When you figure it out, you never have to work for it. You never have, it pays for itself after you figure it out. I lost 1/10 of a Bitcoin on stop losses. I used to throw Ethereum away like it was candy. I just didn't know what I was doing. I think everybody makes that mistake in the beginning.
Yeah, Bill, I remember when you got it. I remember when the light bulb went on for you. That's why you're here doing what you do, and that's why you help so many people, because you went through that.
Yeah, I should have practiced in mock. It's what I tell everybody now.
Exactly. All right, guys. Well, Bill has posted the link for the onboarding. So for those of you who are new, make sure you get on that. That's at 2:00. And he also posted in the Zoom chat here, but he also posted in the trade chat in Discord and also in the announcements section in Discord. So there's no excuse to miss it. Make sure you get on that. If you're not new, or even if you're new, but you've been on one before, but you've only been on one and you're only a couple weeks old, Bill, is it okay if they join as well?
We get folks that come 30, 40 times. You guys are more than welcome to come as many times as is necessary. Folks just like to hear me talk, I think, sometimes.
I think that's wise to do, guys. Do it until you don't need it. Okay. It's just more training, it's more coaching, it's more perspective from people in here who've been there and done that. And I'm going to put together for Wednesday, I'm going to try to get Jake on if I can. Might have to bribe him. He likes to be private, but we'll have a training on the different, we're going to do different strategies that different people have done. And also we do have some traders in the wings, I should say, who are being prepped for having their own call in addition to our existing calls, just to have more help for everyone. Okay. All right, guys. So have a great rest of your day. I got to run right now. Get on the onboarding if you're new, and I will let you know if I see. Let me just look real quick. Still Bitcoin is at 112.4. It went up to 112.8 and starting to come back down a little bit. So I'll let you know if I see any change. But if we break through the 112, if we get back down below the 112, we might be going to the 108 to 110, just like I said earlier. So I'll keep you posted on that. But just get on as many calls as you can, guys. Yeah, go ahead.
Take a quick look at ETH, would you please?
Yes, sir. Looks very similar to Bitcoin, except for it didn't come down as far. Well, maybe it did. Let me just see here. It kind of did a very similar thing here. Where we had this would be Bitcoin's 123, 124. We double topped and then dropped. And so it came back down, hit resistance, support, broke through resistance, and it's coming back down to support here. This is Ethereum, guys, at 45.95 right now. If it breaks through that support at 45.95, what we could be seeing here in the making is a very similar situation to here. We had resistance, we broke through, and we made a high right here, 4,800. And then we consolidated in this for a while, came all the way down to this zone before breaking out and climbing to a new high. A lot of times when this happens, it's downward trending, could be falling wedge kind of stuff. Seen it in Bitcoin, could be like the same thing here. I'm not saying that that's where we're going, but right now it's falling. Possibly falling wedge territory. Now this might not be the top right here. This is the top up here, but this might not be. So it could be like this. Could be. Depending on where you put that. This could be an anomaly here because this one didn't even, this resistance right here, guys, that you see this top, lower high, all the way down here. It wasn't affected here. I mean, we went right. I mean, if I bring this over here, we hit it. We actually, I shouldn't say that. We did hit it here, and then we went and then fell right through it like it was nothing. And so now we're coming back down. Now, there will come a time when it breaks out. So the question is when. But to me, it's still correlating with Bitcoin. Same with XRP. There's a lot of correlation there, guys. These have not broken away yet. And so I would draw maybe something similar and then wait for a breakout to the upside before you get long on it. But in the meantime, are you short or long? Are you in any position on it?
And not, I was just drawing that trend line from way back and drawing that forward, and it kind of ran into that area where it's at now.
Yeah. If we go back and look back here, we hit this little area where we had support, resistance. We broke through support, broke through resistance, and then drop. Here, we came back, we hit it as support, and then we broke through and we hit it as resistance again. So we're like right here where we broke below and came back up. Could we drop back below? Yes. We could drop back below and be in this channel under here again. I mean, this is the beginning of a week. Normally we're bearish through the weekend and then we pump back out on Monday, but so far that has not happened. Let's just look at XRP real quick. Another very kind of similar looking thing here, but the XRP was not at its high when this happened. So but it did break out of this big thing and then create the same kind of bullish flag that it fell to the downside. And right now, XRP is creating a very almost perfectly shaped bear flag on the lower time frame. So this is a 10-minute time frame. If it breaks to the downside, XRP could come back down here in the 280 range. Maybe only to the 290, 280. Yeah, it already hit that. It already hit the 290 and bounced. So it's possible. We'll see if it does break below that. It could definitely come back down into this lower range. And that could be the low. That could be the low that we've all been waiting for. That would be the 208. I mean, the 108 on Bitcoin before bouncing finally and coming out. Let me zoom out a little bit so you can see why would it come down here? And you look at the fractals and you look at all the, let's just take this previous flag because this was a big bull flag. That's what we're in right now. This red line right here would be the center line. We get rid of some of this other stuff. Too much going on. If it did break below that, then yeah, I'm probably coming right down to this. Probably right around that area. And it did bounce on the center line here. And that's why I thought this might be the time for the breakout. And that's why I put this red line here, because if it broke out, that's how high it could pump all the way up to this level, $4.50 range. And I think that that's still coming. But in the short term, we could come down and retest the center line again, or maybe even the bottom of this before we break out. May not be ready yet. All right, guys, it's 1:59. If you're new, get on the onboarding. Everyone else, have a great rest of your day. If you have any questions, ask it in the chat. Precious says, Nico, where do we get the signals you send out? Is it the email or phone text? Precious, Discord. Come to the onboarding, Bill says, on the next call. But real quick, I'll show you right here. You go into the Discord and you want to turn on Nico signals, Chad signals, maybe even members idea. All you do is you click on Nico signals and then you come up here to notifications where the bell is and turn them on, all messages. The reason why mine aren't on is because I don't need to be notified of my own signals.
Okay, thank you. I'll do that. Thank you so much.
You're welcome. But get on the onboarding with Bill also. He'll help with
I'm
that.
getting on right away. Thank you, sir.
All right, guys, have a great rest of your day. I'll see you on the calls. I'll see you on Wednesday, and we're gonna have some kind of training. I'll announce it in the group.